Good morning and welcome to the ADS Securities Markets Update. We'll start today with a look again at the U.S. economic figures that were released yesterday, which had notable impacts on the markets. The entire figures came in with another disappointment, which basically led the U.S. dollar to decline across the board. The jobless claims, first of all, increased slightly by 1,000 claims toward or up to 295,000 last week, up from 294,000 the week before. But most importantly, the manufacturing PMI unexpectedly declined back toward 54.2 in April, down from 55.7, while the estimates were to remain stable at 55.7, and this is the lowest level since January of last year. In addition to that, the new home sales tumbled more than expected, or declined more than expected, declining by 11.4% in March, while the estimates again were to decline by 4.5% only. First, this is the biggest monthly decline since July of 2013. Moreover, February's reading has been revised even lower toward 5.6 instead of a gain of 7.8%. Kansas City manufacturing activity index also unexpectedly declined further toward -7 in April, down from -4, while the estimates were have been anticipated to rise slightly to -2, up from -4. And this is the second monthly decline in a row, which is not seen since 2013, and the lowest reading since February of 2013 as well. All of these data has led the Economic Surprise Index for the U.S. from Bloomberg to decline to a new 7-year low toward -0.78, which is the lowest reading since 2009, which means that the current period is the most disappointing for the U.S. economy since 2009. Moreover, the U.S. Q1 GDP estimates from Bloomberg have been revised even lower toward 1.3%, down from 1.4, while it was around 3% at the beginning of the year. As for the Asian session, there were no economic releases today, so looking into the upcoming European session, there is only one economic release from Germany in addition to the Eurogroup meeting. The IFO business climate is expected to rise slightly toward 108.5 in April, up from 107.9, which would be also the 6th monthly increase in a row and the highest reading since June of last year, which should continue to support the euro above 1.08. In the US today, another major set of economic figures will be released, which may have a notable impact on the markets today, especially if they come in with another disappointment. But the core durable goods, which basically this is the one that we'll be watching today, the core durable goods is expected to rise again by 0.2% in March, after declining by 0.6% in February, which would be the first increase after 5 months of consecutive declines. However, the possibility for a disappointment remains there. And in addition to that, the durable goods order may rise again by 0.7% after declining by 1.1% during the same period. A disappointment data would lead or would increase the speculations for no rate hike by the Federal Reserve in June, and therefore the US dollar decline may continue or may resume throughout the week. As for the technical side, or technically, yesterday the British pound closed with a positive pattern on the daily chart, which basically suggests another rally toward 151.70 in the next few hours, which basically represents a 61.8% retracement from the recent decline since February until the low of April. In addition to that, or finally, we have the euro. Yesterday, the pair managed to regain above 1.08 again. However, it failed to break above 108.20. However, the technical indicator remains positive for the time being, which may continue, or we need to watch the 108.20 in the next few hours. Positive IFO from Germany will be the catalyst for further gain, and the next resistance we'll be watching is basically 1.0870 for the time being. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. I'll see you once again next week. Have a good weekend.